Okay, let's dive in. Welcome, everyone. We're digging into something pretty critical today, how conflicts in the Middle East really hit home, affecting your personal finances.
Yeah, and we're basing this whole conversation on the really insightful analyses and reports you've given us to work with.
Exactly. So our mission here is to use this material you provided to, break down how these distant events can actually ripple through global markets, impact your investments.
And crucially, what the analysis suggests you can actually do about it. How to sort of protect your finances when things feel uncertain.
Right. So let's start with that first ripple, the global economic shockwave. What did the sources show there?
Well, the material really stresses how fast things cascade. I mean, one report you included showed oil futures jumping, what was it, like 7% within just hours of a major incident being reported.
Yeah, that makes sense. It's the fear, right? Fear about supply chains, production getting disrupted in such a key region for oil.
Absolutely. And that immediately translates into higher energy costs everywhere. It's not just, the price at the pump.
Oh, yeah, one source definitely highlighted that. It's transport costs for literally everything. Manufacturing, even farming needs fuel. It touches all of it.
It really does. It's a core cost. And at the same time, the analysis points to that classic flight to safety. Gold kept coming up.
Right, the safe haven asset.
Exactly. One piece noted gold prices climbing, maybe $50, $100 an ounce in just a week or so, because investors are trying to shield their money from the turbulence.
And the why behind gold, as one source explained, is that long history, right? As seen as holding value outside of specific governments or economies that might be, well, involved in the conflict risk.
Precisely. It's perceived independence, and then there are the currency shifts. Your material definitely confirmed that pattern we often see.
The U.S. dollar strengthening.
Yep. Because global capital, well, it looks for stability in a crisis. The dollar is still the main reserve currency, so money flows into dollar assets when people get risk averse.
Which means other currencies might suffer.
For sure. Emerging market currencies, especially ones sensitive to global risk perceptions, they can weaken pretty fast. One analyst you provided pointed out a specific example. I think it was a smaller economy's currency dropping maybe 3% against the dollar almost overnight.
Wow, okay. It really shows how linked everything is.
Totally interconnected.
So that naturally leads us to investments. How does this volatility directly impact, say, your stock portfolio? What did the sources indicate there?
Volatility is definitely the key word across the board in the materials. And divergence, too. Stock markets generally, they can take a hit.
Yeah, uncertainty tends to do that. People pull back from risk.
Exactly. One chart you included showed major indexes, maybe like the S&P 500, pulling back a couple of percent, maybe 2-3% in those first few days after a crisis flared up in the reports.
But like you said, divergence. It's not the same across all sectors, is it? The sources gave examples.
Oh, definitely not uniform. Defense stocks, for instance. It's, well, perhaps predictable, but the analysis showed companies in that sector often seeing their valuations rise, the expectation of more government spending.
Right, while other sectors get hit hard.
Yeah, things sensitive to global mood and consumer confidence. Travel and leisure were specifically mentioned in one report you shared. A company's stock might drop, say, 5% pretty quickly because people just hesitate to book trips when there's global tension.
Makes sense.
Yeah.
Okay, what about crypto? Bitcoin specifically. Did the material address that? Seemed like a mixed bag from what I saw.
It really was mixed. Some analysis you included still talks about Bitcoin as maybe digital gold, an uncorrelated asset, potentially a haven.
But others disagreed.
Strongly. Another piece you shared made the case that Bitcoin's own volatility makes it unreliable in a crisis. Historically, it can actually fall sharply right along with stocks when real panic sets in.
So no clear answer there from the sources, which is interesting in itself.
It really is. It kind of raises questions about what safe even means now.
Okay, so given all this, the shockwaves, the varied investment impacts, what did the material suggest in terms of practical steps? How can you protect your money?
The absolute most consistent theme across all the analysis was diversification. Don't put all your eggs in one basket, basically.
Spreading investments across different types of assets?
Exactly. Stocks, bonds, maybe real estate, commodities. Having that mix is presented as, well, essential to cushion the blow if one area gets hit hard. One source even modeled it, showing much smaller losses in diversified portfolios.
And building on that safe haven idea, gold came up again.
Yeah, the material suggested maybe considering a slightly higher allocation to physical gold or precious metal funds. The thinking, based on the analysis, is just that tendency to hold value when paper assets are shaky.
Okay. What about cash?
Good point. Keeping some assets in cash or very stable currencies was another practical tip highlighted. It's not just about safety, it's also about flexibility.
Flexibility. How so?
Well, if markets dip significantly, having cash ready means you could potentially buy assets that have become undervalued. Turn the dip into an opportunity, as one strategic note you provided put it.
Ah, right. But the key thing, and the sources really hammered this home, is not to panic, isn't it?
Absolutely crucial. Stay informed, yes, but avoid that knee-jerk panic selling. One case study showed investors who sold during a previous crisis just locked in their losses.
Whereas those who held on or even carefully bought more when things were low.
They generally recovered and saw gains later. It's about having a long-term plan, sticking to it, and using analysis like the stuff you shared to guide decisions, not emotions.
Preparedness is partly structure, partly mindset then.
That sums it up perfectly, yeah. Portfolio structure and psychological discipline.
Okay, so let's recap the core insights from the material you brought us. We saw the global impact oil, currency shifting, then the specific investment effects, defense up, travel down, crypto. Well, uncertain. And then those practical steps. Diversification is key. Maybe consider assets like gold. Keep some cash for flexibility. And most importantly, stay calm and informed. Don't panic sell.
And yeah, every single one of those takeaways came directly from the analysis you provided.
Right. So it really leaves you with a thought, doesn't it?
Yeah.
Knowing just how interconnected global events in your own finances really are, as these sources clearly show, how might actually preparing for that connection, staying informed like this, how might that fundamentally change how you manage your own money going forward? Something to definitely mull over.